Hey, everybody, welcome back to Dividend Investing with Lincoln. Now, I'm Lincoln Wood, your host. I'm a business school professor, and I'm also a passionate income investor focused on helping everyday people generate consistent dividend income streams without shouldering unnecessary risks. Now, if you are familiar with my channel, you will know that I absolutely love getting into some of the lesser known corners of the income world. Now, today I want to turn our attention to closed-end funds, or CEFs. Now, this is an investment category that often flies under the radar for many investors, but it can be a real hidden gem for many income-focused portfolios. Now, unlike an open-ended mutual fund, which continuously issues and redeems shares at their underlying net asset value, the CEFs trade on a stock exchange more like a stock, and their prices can swing above and below the value of the net asset value of their holdings. Now, this dynamic actually opens a door for many new opportunities that savvy and patient investors can exploit to their benefit. Now, CEFs are known for their ability to deliver strong distributions, often paying out regular income that can be really appealing, especially to those who value cash flow. Now, yes, there are nuances, there are risks. Challenges like leverage, discounts to the NAV, portfolio compositions, but for the right investor, these funds can be very powerful tools for generating steady dividends and adding diversification into their income mix. Now, in today's video, I want to break down one of the better-known closed-end funds in the dividend space. This is the Adams Diversified Equity Fund, ticker symbol ADX. Now, we're going to explore how it's structured, what it holds, how it has performed historically, and then we'll figure out what sort of investor might find ADX to be a particularly good fit. Now, maybe you are seeking a reliable dividend payer, or you're looking to dip your toes into CEFs and you just need a solid, diversified starting position. Well, by the end of the video, you will have a much better idea of whether or not ADX can comfortably be a part of your own portfolio. So, my friends, let's jump into it. Let's start by looking more closely at the Adams Diversified Equity Fund. Now, to understand ADX, I think we need to think a little bit more about the structure and strategy. Now, ADX is a closed-end equity fund that has been around since 1929. Yes, that's right, almost 100 years. Now, this is a remarkable lifespan for a single fund, especially when you consider how many companies or other investment vehicles have come and gone over the decades. So this fund has an incredibly long track record, and I hope that gives you some confidence in the stability and the approach that it takes. Okay, so what exactly then does ADX actually do? Now, at its core, ADX focuses on holding a diversified portfolio of primarily large cap US equities. So, look, in other words, it buys shares of well-established blue chip companies, names that you're going to recognize. We'll get into that later. Over time, these holdings will shift, but the idea that they have is to maintain a broadly diversified portfolio that's going to capture growth and income potential over the major American stock market. Now, the managers are seeking opportunities over various equity sectors, aiming for capital appreciation and generating a steady stream of income. What sets them apart from a basic index fund or a traditional mutual fund is this unique feature of the closed-end fund structure. So as a closed-end fund, it trades on the stock market, and that means that share price can be higher or lower than the value of the underlying portfolio's assets. This is often referred to as trading at a premium or a discount to the net asset value. Now, for years, ADX has generally traded at a discount to its NAV. Now, for some investors, this seems attractive. I mean, when you buy shares at a discount, you're essentially paying less for the underlying assets than what the market value suggests. Now, for investors, over the long term, if this discount narrows, you can actually benefit from the gains of the portfolio in addition to the closing of the valuation gap. And that's one of the big advantages of the closed-end fund structure for investors. Now, another wonderful aspect of ADX is its history of paying consistent and substantial dividends. So many investors will turn to CEFs for the income opportunities, and ADX doesn't disappoint here. Its distribution policy, which often includes a significant year-end payout in the past, can provide a very nice boost to your income. But just Keep in mind that these dividends can be more variable than from other fund types. But look, the track record suggests that ADX is committed to returning capital to the shareholders, and this makes it a really interesting holding for people who value distributions. Hey there! Let's take a quick break. If you want more than these few YouTube videos, I would like to invite you today to sign up for my new newsletter, the Dividend Dynamo. Now, in the newsletter, you are going to get some more deep dives. You'll get a heads up on the videos as they're released on YouTube. You'll get insider information not available elsewhere, as well as some portfolio changes that I'm making. All of this delivered straight to your inbox. If you're interested, use the link down below or use the QR code, and I'll see you soon. Now, is ADX the right fund for everybody? And the answer is definitely not. So look, it sits at the middle of several different desires. Now, it gives you the blended growth in the stocks inside the fund and income, but it's not a pure play in either direction. It's largely invested in the large cap US equities, and so it's going to behave somewhat like a broad market equity index over the long haul. It's going to have a lot of correlation to the underlying sort of S&P 500 market indices. But it does have some interesting quirks and twists because of the closed-end structure. So look, if you're looking for very stable monthly payouts or a specialized fund in a particular sector, then look, ADX is not going to be the right fit for you. But if you're an investor who really is comfortable holding a chunk of a good and well-diversified equity portfolio open to advantages and quirks with closed-end funds, then ADX could very well be a good contender. It could serve as cornerstone or a complement in a broader investing strategy prioritizing capital growth and meaningful dividends. Now look, the next thing I want to do is go deeper into the fund's portfolio composition, historical performance, and have a look at how people and investors can position ADX in their portfolios to capture most of the benefits. Okay, so let's have a look at what has been going on with ADX lately, and there's two very notable points over the last 12 months. So they have changed their distribution policy, and they've also undertaken what they call a tender offer. Now, as we recall, they have a straightforward objective: long-term capital appreciation and income. And they really get this by maintaining their equity diversification with quality large cap names. So generally in line with the overall American equity market. Now, the tender offer is when the fund offered to buy back 10% of the outstanding shares at 98% of their net asset value. Wow. Now, that's pretty cool. Now, if you think about this, it's trading at a discount, and they're offering to pay more than the discount and buy 1 in 10 shares on the market back at this higher price. Now, that gives you an immediately, it gives you a benefit and a bonus, essentially. So if you actually were able to tender your entire position, I think around 1/3 of your shares would have been accepted, as not every investor took advantage of this opportunity. So it is a big event, but it's not that uncommon in the closed-end fund world. Now, after the tender, the discount basically started to widen up again, and the discount became larger, and that's something I think that we see very frequently with this type of tender offer. Now, look, it's not unusual. Once the immediate benefit of the tender has passed, the prices just tend to drift back to the old pattern. So the discount closes temporarily, and then the discount expands again. Now, as a result, then the share price underperforms the net asset value over that period. So you can see this pressure on the total returns if you compare the ADX to the underlying NAV performance, or even to the broad market benchmark like an S&P 500, use the SPY, for example. Now, there was, of course, a little bit of late summer volatility as well, which probably contributed to the hiccup. Now, why and what was going on here? So the big push for the tender offer was essentially looking at what they did and how they paid out the distributions. And a big driver of this was an activist investor company called Sauber Capital Management. Now, they've started to reduce their stake in ADX, and this suggests that they're now going to target some other opportunities. But what's interesting is this discount hasn't blown back to the deepest levels we've seen in the past. And I suggest and believe that the reason for this has been the change in the distribution policy that's really driving this. Now, before the change in the distribution policy, ADX just paid out a small amount every quarter, a few cents basically, and then they'd top it off at the end of the year with a large special distribution. What this allowed them to do is it allowed them to pay out small amounts every quarter, say from dividend income from their portfolio. Now, as they bought and sold stocks and then began to sell stocks at a gain, they would accumulate the capital gains over the year and they were able to pay that out through the special distribution at the end of the year. Now, the change in policy has come about and they're now committed to paying a minimum of 8% of the net asset value every year. And instead of one payout at the end of the year, they're going to spread these distributions evenly throughout the year, every quarter basically. So 2% of the net asset value every quarter. Wow. And the most recent quarterly payout, for example, is 44 cents. Now, this effectively acts as a smoothing out of the distributions, which many investors and income-focused investors are going to find incredibly appealing. It smooths it out, it makes it predictable, it makes it manageable. You can almost begin to use this to pay your bills. And this interest and this more appeal, this greater appeal, is probably going to help these income investors really support the share price by buying more. And this is probably going to make that discount smaller than what we may have seen in the past. Now, if they do generate a huge amount of capital gains over the year, so if there's a very strong bull market, they can pay out more than the 8% that they've sort of guaranteed or that they've sort of put a line in the sand. Now, given that the US equities have done well, we probably will be seeing big payouts again at the end of the year. And this is largely because the fund is invested in the big companies that are driving the stock market, like tech giants that have soared. And these gains are going to fuel a lot of their distribution growth. And look, if we look at back over their annual distributions, they're often over 8%, usually closer to 9%, at least over the last 5 years. So this distribution change to sort of 8%, it's not a radical change really, it's just about making it more predictable and less lumpy. Most of these distributions are probably going to be composed of long-term capital gains, more or less as they have done in the past. Okay, so let's talk about performance. Let's see what's inside the portfolio now. I mean, look, ADX's holdings, they really do resemble that broad market index, like the S&P 500. There's a bit more of a skew towards the larger cap and growth-oriented tech names, and the expense ratio is also reasonably competitive for a closed-end fund. I mean, it's a fairly basic, straightforward, easy to manage and easy to understand fund. Yes, you can certainly say that an S&P 500 ETF like SPY, yes, it would be cheaper. But look, ADX does sometimes outperform these benchmarks over certain timeframes, especially when you factor in changes in the discount over time, as well as distribution payouts. So look, right now I think we can say we've got a fund that's got a really cool distribution approach of 8% a year. It's got a pretty good discount, and it's well diversified with long-term US equity growth. So if you're worried about overall valuations in the US equity level, like some people are, perhaps like me on some days, you could consider easing into ADX, dollar cost averaging rather, than jumping in with a big investment all in one go. So dollar cost averaging, a DCA, could be quite a sensible strategy if you're looking to add this fund into your portfolio. It could give you a chance to ride out any short-term market swings while still positioning yourself to benefit from the income it generates in any potential discount dynamics. Look, I reckon ADX, its changes in policies and the recent tender offer have really begun to set the stage for more stable, more income-friendly, closed-end fund attributes in this fund. And it could very well deserve a place on your radar or in your portfolio if you are interested in combining market exposure with a steady and predictable dividend flow.